Hi, everyone. It is time for New Listings at Noon. I'm Karen Ringo, and unfortunately, my co host Allison Semeka is under the weather this week. So we have a very special guest with us. But Allison, if you're watching, I hope you're feeling better today. And our special guest with us today is Louis. He's actually one of my favorite lenders, Louis Berman. He's a Fairway independent mortgage, and we've done tons of deals together. Louis is amazing. Louis, how are you today?
I'm doing great, Karen. Thanks for having me. Really appreciate being on here today, and I hope Allison feels better.
Awesome. So I will say, with this market is slightly shifting. Buyers and sellers, we're feeling it a little bit. Interest rates have been going up, and I thought it would be a really good time to get Lois on here with me, and let's talk about what's going on in the market. Let's talk about interest rates. What does that mean for buyers? So Lois, can you just as a whole tell us what have you been seeing in the market recently?
Yeah, that's a really good question, right? So about 6 months ago or so ago, rates have begun to increase fairly drastically from one point to another, right? So we were kind of in an interest rate market of our low threes 6 months ago. Now we're at like the low fives, high fours. So it's definitely been very interesting, bringing to light how rates impact payment, right? So some people, when you show that have been looking for a long time, you show them a new interest rate, new payment. It can be a little bit shocking to them, but historically, we're still at a very low point for interest rates and demand and housing supply. Demand's high and supply is still very, very low.
And I will say this week we did have a significant drop this week, right, in interest rates. Can you tell us what that was and where interest rates are
Yeah.
currently?
So from a high level, like probably about 2 weeks ago, I was quoting rates probably in like the mid five, so 5.375, 5.5%, depending on property type, credit, those types of things. Somebody with good credit this week, as of pricing that came out today, could get a conventional loan for around 4.99%. So that is a pretty solid increase, depending on how much you're financing. It could impact payment quite a bit.
And so awesome. So that's great. That's good that it's, if you're right now, go ahead and lock in that rate because I don't know if it's going to get any better anytime soon, right?
Yeah.
Or maybe you never know. But what does this mean? How is this affecting buyers? What does this mean with interest rates for buyers? Because I feel like as I'm working with buyers are getting a little afraid now that the interest rates have gone up a little bit. And then sellers are getting a little nervous too. So how is this affecting buyers?
Yeah, absolutely. So higher interest rates, they mean higher mortgage payments, right? So the cost of borrowing something is more expensive. Impacts their payments. Some people that have a very tight budget, kind of puts them in out of the range for what home price that they wanted. But going back to the cost of borrowing things, right? When you're renting, the interest rate on rent's 100% because you're borrowing something. So that's always something to consider, right? I'm not the type of person that's like you should only buy when rates are low. Rates are high, and payments are higher. Stick to affordability. Those types of things are more important to look at, right? Everything means a little bit different to everybody's budget. So as long as you're keeping your affordability at bay and you're considering those important things, your budget, as long as homeownership fits in that realm, I think it's always a good idea to purchase a home.
So give me an example. So if we had a mortgage rate, let's just say, let's go in the middle, let's say somewhere around 500,000. So
Yeah.
with an
Oh yeah.
interest rate previously before, what would a mortgage be like with the previous low interest rate
Yeah.
at 500? And then where would that mortgage rate be today at a house
Yeah.
that
Yeah.
costs 500,000?
So yeah, let's flash forward or flash back to 6 months ago, right? You financed $500,000. Your principal and interest payment would probably be around like $2,176, right? At a
Mm-hmm.
3.25 rate. Um, Today, at 4.99%, that same payment is $2,681. So you're looking at about a $500 difference in a very short amount of time. And $500 to some people it's a huge amount that could literally throw off their price range.
Mm-hmm.
But yeah, that's kind of the world that we're in right now.
Okay, but it's not too, I mean, 500 a month, yes, it
Yeah.
is significant, but the long term, if you think of things, it may not be as significant. Maybe that
Yeah.
house is still affordable, maybe a little
Yeah.
stretching, but it's still affordable.
Yeah,
So,
and that's the big thing that I think people need to consider, right? I don't think anybody should exert themselves or give up things that they like to do, right? Within reason to be able to acquire home ownership. But rates are very cyclical, right? So typically when you see a refinance cycle, you're in the position, even if you bought when rates are higher, to refinance that mortgage note, and then obtain a lower payment, all while building equity across that entire time period. So just know that rates are cyclical. But equity, especially in this DC market, where even in the housing crisis, a lot of value was retained. It's really, really not a bad bet to think that at some point the mortgage that you're getting today might be refinanced in the future.
nice. Now, I know you don't have a silver ball, so you can't, really make a prediction. But as we're in meetings and we're having experts come in and they talk about the market, there are certain predictions that we're hearing. What is your prediction? Is there a prediction of of where interest rates will be at the end of the year? And we know that interest rates are being raised to try to stop inflation that's taken
Yeah.
place. So talk about that a little bit for me.
Yeah, absolutely. So you're right. Nobody has a crystal ball. So it's really hard to see where rates are going, right? So if you asked me 2 weeks ago, I'd be like, yeah, I think rates are gonna, rise, continue, mortgage rates will continue to rise over the next few months. We've seen a slight bit of relief this week. Who knows what next week brings, right? So I think that inflation is still a major issue, right? And the way to combat inflation is by raising interest rates. I think as long as inflation's a problem, we could probably see interest rates continue to rise, even in mortgage rates as well. So it's just it's kind of a really hard thing to determine, right? We have monkeypox news and all kinds of different headlines being thrown at us. Global inflation's a problem too. So I do think rates are headed in an upward trajectory over the next 6 months or so, if not longer.
And then, some people may understand this, but there may be a few people that are watching this that don't really understand. So why is it so important, as you're saying, that the Fed, why is it so important to stop inflation for those that maybe don't
So
understand?
inflation, right? So being a human being and being alive and doing things is more expensive. And inflation means that those things are getting more expensive, right? So getting milk, getting gas, groceries, all those things are very expensive. And if wages don't kind of keep up to that, then it can drastically alter everyone's life pretty impactfully. So it's definitely a huge priority to stop inflation. And the tools to do that are typically raising interest rates. It gets a little bit scary for people. It's weird. Every time I go to the grocery store now, or every time I'm in like a public place, it's like, I can't believe gas was X amount. I can't believe milk was this amount. And it's very it's a problem that impacts everybody. Inflation's kind of a tax on every single person that exists. So they want to fight that as much as possible because inflation leads to some really hard times.
Awesome. Now, here's a question. Have you seen a decrease, like with the interest rates haven't been high? Have you seen a decrease in the amount of loan applications from buyers?
Yeah, that's a really good question, right? So I've always been a purchase first mortgage lender. Refinances, I haven't done one this month. All of our loans have been purchases. And we're in a market over here where there's a lot of relocation happening. People are getting government jobs and moving to the DC area. There's a lot of military members that are being transferred to the area. And then you go back to that option, right? Do I pay 100% interest rate on rent, or do I purchase a home, right? And affordability in this market still seems to be there. On the flip side of that, people that have been looking for a longer period of time, we have been getting a couple of emails like, hey, I'm putting this on pause for a little bit. And what we're doing there is just keeping them informed with rates, right? And some people are in a situation where their budget is very, very, very tight. So that extra, $300 to $500 a month, it's like a no-go for them. And then you do have home prices in this area that are retaining value. So it's a very difficult thing to pinpoint. But I think, yes, is it deterring a few people? Absolutely. Is there still a huge demand for people to buy homes? Yes, and I think there always will be, especially with the massive inventory shortage that we have.
Yeah, I will say, yeah, and it's interesting because we've been noticing the same thing, realtors. As we're listing certain properties, maybe you're not having 10 to 14 offers, but you're still having 5 to 7 really really good solid offers. So
Yep,
yeah.
absolutely. Yeah, I think that pandemic, like, because it was coupled with two things, right? Like everybody likes a deal, right? So when interest rates are super low, people are bidding, and then it gets a little crazy. And
Mhm.
now we're kind of like in a more normal, feels like a little bit more normal
More
of a
normal.
market where the offer amount, the urgency is about the same. Yeah.
Now, what are some creative ways? If interest rates are at 4.99, what are some creative ways that buyers can do to? Are there some creative ways that buyers can do to get that interest rate lower?
Yeah, absolutely. So it's different for every single person, right? And then the worst thing that I would ever want anybody to do is be stuck in a loan for a long time that just doesn't make any sense, right?
Mm-hmm.
So there's option one: take the par rate, meaning you're not buying down the interest rate at all, and you're comfortable with that payment, right? Option two would be to basically pay more money or pay points to get a reduced rate. And per person, it's going to be different in every scenario, right? Some people have long-term plans for the home where they'll recapture that cost that they paid up front. Other
Mm-hmm.
people, if the savings isn't there, right, and they end up refinancing that loan in a short amount of time, then they're going to come back and say, Lewis, why did you let me do this? I can't believe that I did this situation. And then adjustable rate mortgages, right? In some products, those rates are a little bit better.
Mm-hmm.
But long-term plans always factor in, right? Are you
Mm-hmm.
going to live in this house for 2 years? And
Mm-hmm.
then is it going to convert to a rental property? In that case, you probably might not want an ARM because you don't know what rates are going to look like. You don't want a payment that could adjust in the future when you're not occupying the property, as
Mm-hmm.
interest rates are more expensive
Mm-hmm.
for investment properties. So there's a ton of different factors to go in there, but buy down options, ARMs are an option. Not everybody has a specific reason for where those things make sense, and it's a lot of diving in to figure out how that looks and how that works for each individual person.
Mm-hmm.
Um, and I think that's really important to do too, because it's not just a blanket, hey, buy down your interest rate 3 points, because that's not going to work for everybody, right?
Right.
Take the par rate isn't right for everybody either.
Mm-hmm.
So it's really important to dive into these things with a mortgage consultant, so they can really help you, figure out what works best for you.
Yeah, I will say when we first relocated to DC, we knew we probably weren't going to be living in the city longer than 5 years.
Yeah.
So we did is it a 5-year arm? Is that what
Yep.
we call it? Yeah.
Yep.
So we did the 5-year arm, and it worked out for us because I
And
think we were only in the city for about 3.5 years, and then we moved out.
yeah, and you guys are brilliant for doing that, because a lot of times you should know your exit strategy from the home that you're purchasing. And a lot of people don't know what the future holds, right? Especially, single person looking for a condo, and they're like, oh, I want to live in the city. You know as well as I do that relationships,
Right.
kids, they could come in really fast.
Right.
In 5 minutes. So if you have a concrete idea of what you're doing,
Yeah.
arms are a really great option. If you're not sure,
Maybe
make
not.
sure
Maybe
you're
not so
doing
much.
something that'll fit with your life plan. But yeah, that's awesome that it worked out for you guys, because those are people with finite plans for a space or a home. Those are the types of people that arms work out really well for.
Right. Can you talk about, so Lewis is one of my favorite, like I said earlier today, he's one of my favorite lenders. So a lot of times when I have new clients and they may come to me and maybe they're working with a credit union, or they're coming from, out of town relocating, and they come with their lenders. Can you tell people why, what's the difference between working with a credit union and working with like a local mortgage company?
Yeah, so credit unions, and I think it's especially important to talk about big banks. They are in this world where everything that makes them money in a roundabout way, it's not just mortgage, right? So when you're not mortgage first, you're not going to do the best job possible on a mortgage, right? Non-bank lenders, local lenders, all we do is mortgage. So we're very, very good at it. We're quick. We give it good advice. We're around the clock. We're real people that really care about the people that we work with. I've been doing a lot of saves recently. So we've had big bank saves, credit union saves, and what saving means, it's like, hey, I need to close in a week or two. because if I don't, I'm going to lose my earnest money deposit because I trusted this big bank or credit union with the power to ruin my entire real estate transaction.
Right.
And I've seen it happen for two reasons. Reason number one, where big banks and credit unions really make a mistake is guidelines. So we don't really have any overlays. Those bank programs, those big bank programs, credit union programs, sometimes they just, even for Freddie Mac, and Fannie Mae loans, will just make up really hard rules that don't make sense. And then they'll end up denying somebody once they have the entire package in front of them. And then these people are just like, oh my gosh, what do I do? Right. That's been frustrating. We've had funny things happen where, like, you know, they were asking for different weird items on like a beautifully renovated home that weren't necessary. We've had people come back and have weird condo overlays that they made up. And it can completely, like, your earnest money deposits at stake, right? So if you care about that, big banks and credit unions aren't really a great place to go, even if your interest rate's really low. I have options for private client money loans all the time. Never take one because there's no trust there.
Right.
And part of that trust comes from just the general hours that those people work, right? So credit union, big bank employees, they're 9 to 5ers. So they clock out on Friday at 5. If you need to put an offer in over the week, if you need information to be able to make a financial decision for your family, you're not going to get that until Monday. It doesn't matter, you know, if the rate's lower. It doesn't matter, you know, if you think that that's the best option. If you're not given the information you need to make something happen, it's useless. So that's another reason that big banks and credit unions are just really difficult to deal with, because a lot of our, you know, real estate transactions, they don't happen during business hours. People normally aren't looking at homes during business hours. So there's a lot of really important information that needs to get to somebody for them to be able to make a good decision. So it's really important that you know, if you're shopping for a mortgage, you ask those people, you know, when do you work? You know, what hours do you work? Are you able to call the listing agent when I submit an offer? You know, what are turn time? Those things are so important. And, you know, a lot of times our world just look at, all right, well, what's the cheapest money that exists? The cheapest money could be no money, or even cost you a ton of money if they don't perform, which has been the norm, unfortunately, for a lot of them.
Right. Well, thank you, Louis. That's awesome. And I will say, I love the fact that Louis is very available. So available when it comes to lending. It's making jokes. So I'm always able to reach him, and it's very frustrating when you're on the listing side and you can't get in touch with lenders and you're reaching out because you want to qualify buyers that are submitting offers. But so Louis, yay, thank you. Is there any last comments that you want to say about the market before we sign off?
You know, I thank you so much for having me, Karen. I really think we hit a lot of important points today. I think it's always important to weigh out, right, affordability, right? How does that mortgage, the upfront monthly cost, how does that fit within your budget, your lifestyle? Is that attainable? Housing in this area has been historically great. I think it'll continue to be so. And then just be very careful with who you work with, because it can really make the difference between even getting your offer accepted all the way to performing on your contract. So thank you so much for having me. It was good seeing you.
Awesome. And thanks, guys, for tuning in. Hopefully we shed a little light on where the market is, where the interest rates are, how not to be too afraid of, you know, interest rates going up and down. And right now they've dropped a little bit, so there's a little relief, and that's really awesome. So I am Karen Ringo, and this was Louis Berman of Fairway Mortgage, Fairway Independent Mortgage. And we will be back next week, and hopefully Allison will be feeling better. So thank you, guys. And we're signing off. We'll see you soon.
See you guys.
Bye.
Take care. Thanks, Karen.